Hello, everybody, and welcome to Echo FX YouTube channel. If you're a new subscriber, thank you for watching, and don't forget to subscribe, like, and share. If you're an existing subscriber, thank you for continuing to stay with us. You are highly appreciated. All right, in this video, I'll be talking about support and resistance. Support and resistance is a vital part of trading that every trader should know and understand how it works. All right, so I'm going to be talking about support and resistance, its usage, what it means, areas, indicators on support and resistance, how to actually use it, and also strategies on using it as well. So let's get started. So a support zone is an area on the chart that tends to prevent price from depreciating further. In other words, they act like a foundation for the price to breathe and move back up. It is common to hear people call the zone a demand zone. Now, note that around support regions, technical analysts are looking up to buy. All right. Now, in a downtrend, prices fall because there's an excess of supply over demand. Yes, it is all about supply and demand. And if you understand how supply and demand works, you know how it affects price. The lower price goes, the more attractive prices become to those waiting on the sidelines to buy the shares, be it stocks, be it currencies, anything at all you're trading in the market. At some level, demand that would have been slowly increasing will rise to the level where it matches supply. Now, at this point, this price will stop falling, hence the support. Support can be a price level on the charts or a price zone. In any event, support is an area on a price chart that shows buyers' willingness to buy. It is at this level that demand will usually overwhelm supply, causing the price decline to halt and then reverse. Yes, so basically, support is just a region, an area where price has gotten to previously in the past and has not been able to break below it. At that point, it becomes a support region as well. So at this region, it is seen that price has gotten to a point where buyers are now willing to enter the market and start to push the market upwards as well. All right. So let's talk about resistance. Now, resistance zones are areas on the chart that tends to prevent price from appreciating further. In other words, they act like a ceiling or exhaustion point for the price. It is common to hear people call the zone a rejection zone or supply zone. Now, around resistance, just like support, technical analysts in this sense look to actually now sell. All right. So, at a resistance region, you are looking at selling. Now, let's note that resistance is the opposite of support. Prices move up because there's more demand than supply. As prices move higher, there will come a point when selling will overwhelm the desire to buy. All right, so selling will overwhelm the desire to buy. Now, this happens for a variety of reasons. Okay, so it could be that traders have determined that prices are too high or have met their target. It could be the reluctance of buyers to initiate new positions at such rich valuations. It could be for any other number of reasons. All right, but a technician will clearly see on a price chart a level at which supply begins to overwhelm demand. Now, this is resistance. Like support, it can be a level or a zone or also an area. All right, so once an area or zone of support or resistance has been identified, those price levels can serve as potential entry or exit points because as price reaches a point of previous support or resistance, it will do one of two things. Yes, two things will always happen when price gets to a support or resistance. It's going to bounce back away from the support or resistance level, or it will violate the price level and continue in its prior direction until it hits the next support or the resistance level. I'll take that again now. Two things will always happen once price gets to resistance region. That's why it is also good for entry and exit as well. It's either going to respect that support or resistance region and bounce off it and reverse, or it's going to break it and continue going. All right. Now, let's talk about types of support and resistance. So we have fixed support or resistance. Now, this doesn't move with price. It will remain in a zone until price breaks or respects it. That is, either it's going to break it or it's going to bounce off it. When price retests a zone twice and holds, that zone is called a verified support or resistance. When test count rises to 4 times and the zone holds, then that zone will be tagged a proven support or resistance. Now, you can see from this image at this region, this is a resistance, right? This is a resistance region because price has gotten to this region before, it bounced off it, came back down, came back up again, bounced off it again. And this is a support region, all right? This is a support region. So you can see price has bounced off this, bounced here again, went back, bounced here, bounced here as well. Now remember, as I said, it is not, let's not see support and resistance as a line. It is a region or an area, because if you see it as a line, for instance, here, you might think that the price has to get here again before it's gotten to support. No, you can see it also got here, but not to this line. So this region, this whole area is actually a support region. And also same applies for the resistance as well. Doesn't have to really get to it before, like you see this particular candle didn't get up to this line, but then again this entire region is actually a resistance region. Then we have dynamic support. Dynamic support moves and bounce around the chart with price. Yes, it moves with the price. Most common examples are moving averages and trend lines. Yes, two examples of dynamic support or resistance regions, or rather, yes, resistance indicators are moving averages and trend lines. So, for example, this is a moving average. Now, this is a dynamic support, acting like it's dynamic support here because price keeps bouncing off it and it keeps moving with price. See this region until it finally breaks this part. Now you can see here also acted like a support because price kept coming here trying to break it. It couldn't. It keeps pushing it down until it finally breaks it at this region here, and then it becomes a support. Now also something we also need to note is that a support region can in turn become a resistance region, and a resistance region can later become a support region. I'll explain that furthermore. Now, let's talk about moving averages. Moving averages has proven to be simpler and more dependent than trend lines, but that's because it is derived from price itself. Remember, it moves with price. On the other hand, trend lines, when drawn accurately, has also shown to be dependable. The problem with drawing trend lines for newbies is that they tend to draw it subjectively rather than objectively. Now, when price close above MA, that is moving average. All right, some strategies traders use as well. So when price close above moving average, it is believed that the price is now performing above average and such has potential to appreciate. So once price is able to trade above a moving average line, that is dynamic resistance, it is seen that price is about to continue on an upward movement. On the other hand, when price closes below moving average, analysts believe that the price is now performing below average and as such may depreciate. Analysts will then begin to look out for other key price actions that support either a buy or a sell, depending on the close above or below the moving average. Yes, as remember, as I said, we are going to still talk about strategies on moving averages as well, using it as support and resistance. Now, remember, once an area or zone of support or resistance has been identified, those price levels can serve as potential entry or exit points because as a price reaches a point of previous support or resistance, it will do one of two things, as I mentioned: bounce back away from the support or resistance level or violate the price level and continue in spiral direction until it hits the next support or resistance level. The timing of some trades is based on the belief that support and resistance zones will not be broken. Okay, now whether the price is halted by or breaks through the support or resistance level, traders can bet in quotes on the direction of price and can quickly determine if they are correct. All right, so most times, some strategies, they have to wait. You can either wait for price to break above a resistance. For instance, once price breaks above a resistance, to seeing that price will continue to buy, then you can now decide using other factors to enter a buy trade. On the other hand as well, if price is able to break below its support, it is believed that price can will continue going down, and at that point you can now use other things as well to determine if you are going to be going in for a sell. Now, if the price moves in the wrong direction, which is breaks through prior support or resistance levels, the position can be closed at a small loss. If the price moves in the right direction, that means it respects prior support or resistance levels. However, the move may be substantial. All right. So at that point, it also helps to set your take profits and your stop loss regions. Now, if you do not understand what take profit and stop loss regions are, you might need to watch my previous videos on take profit and stop loss as well. All right, how to actually set your take profit and stop loss. Yes, so support and resistance regions can actually help you determine your take profit and stop loss positions as well. Okay, so now key points we need to take away and remember about support and resistance. Technical analysts, oh, tongue twister. Technical analysts, yes, I got that right this time. Technical analysts use support and resistance levels to identify price points on a chart where the probabilities favor a pause or reversal of a prevailing trend. All right. Also, support occurs where a downtrend is expected to pause due to a concentration of demand. Resistance occurs where an uptrend is expected to pause temporarily due to a concentration of supply. Market psychology plays a major role as traders and investors remember the past and react to changing conditions to anticipate future market movements. Yes, this deals with a lot of. Now, remember, when we want to analyze, we use the past to actually envisage the future and what the price is going to do. So, yes, when you talk about market psychology, you need to take cognizance of what it has done before in those regions. Support and resistance areas can be identified on charts using trend lines and also moving averages. This is just the part one of moving support and resistance region. So I'm going to turn on the next video. I'm going to make a next another video that will talk about more on the basic knowledge, moving averages, trend lines, support and resistance reversals, support and resistance setup, and then support and resistance strategies. Yes, stay with me. This is just part one. On the next video, I'm going to be talking about these topics and how to actually make money using support and resistance. Okay, so thank you very much for watching. If this video has been helpful to you, kindly drop a comment in the comment section and also let us know any other video you'd like us to create for you, and I will do just that. Okay, so thank you very much once again. Remember to subscribe, like, and share. So see you on the next video, and do not forget to subscribe, like, and share. Peace.